All right, so Bitcoin ETFs. You wouldn't believe how much everyone's talking about them lately. It's kind of crazy.
It is interesting,
It's
yeah.
like trying to keep up with a whole new language, you
Well, it
know?
really is. Especially with all these terms like ETF getting thrown around.
Exactly. But don't worry, we're going to unpack all that today. You'll
Yeah,
walk away understanding what's going on and why it even matters to you.
absolutely. And it really is fascinating, all this attention they're getting. I mean, you think with all the risks associated with Bitcoin, people would be hesitant,
Right.
but it seems like the opposite is happening.
It does, doesn't it? Just look at Bitcoin's price. In 2023 alone, it surged 170%.
Wow.
Hitting almost $45,000, especially after such a rough 2022.
Right.
That rebound is definitely catching people's attention. And a lot of people are pointing to one thing as a major factor, the potential approval of a Bitcoin spot ETF by the U.S. SEC.
Hmm. It makes you wonder, why are these ETFs causing such a commotion?
Mm.
Especially when it comes to something as volatile as Bitcoin.
Yeah. So before we jump ahead, let's make sure we're all on the same page about what an ETF even is. An ETF, or exchange-traded fund. It's basically a bundle of assets that you can buy and sell on the stock market, just like individual stocks.
Yep.
It makes investing a little less complicated. And in this case, a Bitcoin ETF would follow the price of Bitcoin. It lets investors tap into Bitcoin's potential gains without actually needing to own any Bitcoin directly.
Right. That's a really important distinction. I think a lot of the excitement around Bitcoin ETFs stems from the fact that they could offer a simpler, potentially less risky way to invest,
Yeah.
especially for those who aren't ready to dive into the complexities of owning Bitcoin themselves.
It makes sense when you think about it. If you wanted to own Bitcoin directly, you'd have to deal with Bitcoin wallets, those incredibly long and complicated passwords, not to mention the constant worry about security breaches or even theft.
Yeah.
And then there are the tax implications, which
Yeah.
can feel like a whole other beast. For someone new to the world of cryptocurrency, it can be a bit overwhelming.
Absolutely.
Yeah.
Not to mention Bitcoin's inherent volatility.
Mm-hmm.
Prices can swing dramatically based on something as simple as a rumor or a news announcement.
Wow.
I can definitely see how that would make some investors nervous.
Yeah. It's almost like Bitcoin's price is on a roller coaster, and not everyone has the stomach for that kind of ride.
Exactly. And that's why these Bitcoin ETFs are so fascinating. They're designed to make investing in Bitcoin simpler, less intimidating, taking away the hassle of managing your own Bitcoin or stressing about those security risks.
So it's like dipping your toes into the Bitcoin pool
Yeah.
without having to dive headfirst into the deep end.
Yeah, that's a great way to put it.
Well,
But
good.
there's a twist. There are actually two different types of Bitcoin ETFs. And that's where things get really interesting.
Okay, now you've got me curious. What are these two types and why does it even matter?
Well, we have Bitcoin spot ETFs and Bitcoin futures ETFs.
Okay.
Let's break down the difference. A spot ETF would directly track the price of Bitcoin. Imagine it like a mirror, reflecting every single movement Bitcoin makes in the market. Several big companies, like Grayscale and BlackRock, have been trying hard to get their spot ETFs approved by the SEC.
Yeah, I've heard that the SEC hasn't been very receptive to those spot ETFs.
You're right. Which brings us to the second type, Bitcoin futures ETFs. These ETFs actually got the green light from the SEC back in June 2023.
Okay.
The main difference is that futures ETFs don't directly follow the price of Bitcoin itself. They're actually based on futures contracts.
Futures contracts. Getting flashbacks to my college economics classes.
Yeah.
Could you remind me what those are?
Of course. In simple terms, a futures contract is an agreement between two parties to buy or sell Bitcoin at a specific price on a certain date in the future.
Got it.
So futures ETFs track the value of these contracts, not the actual live price of Bitcoin at any given moment.
So instead of investing directly in Bitcoin, it's more like making a calculated bet on what you think the price of Bitcoin will be in the future.
You got it. And since these contracts are regulated by the Commodity Futures Trading Commission, the SEC felt more comfortable giving them the thumbs up. They saw them as being less vulnerable to manipulation compared to spot ETFs.
Okay, now that makes more sense. So to recap, we have spot ETFs, which directly track Bitcoin's price but are still waiting for the SEC's approval, and futures ETFs, which focus on future contracts and already have the SEC's blessing. But why is the SEC so hesitant about those spot ETFs? I'm really curious to understand their perspective.
Well, the SEC's main concern centers around the potential for market manipulation. Remember, Bitcoin is traded on a bunch of different platforms, and many of them aren't regulated.
Right.
The SEC worries that this lack of oversight could make it easier for people to artificially inflate or deflate Bitcoin prices,
Oh, I see.
which would directly mess with the value of those spot ETFs.
So it's all about safeguarding investors from any shady business practices that might be happening in the unregulated world of cryptocurrency.
That's a big part of it. The SEC wants to be sure that the price of a Bitcoin ETF accurately reflects the true value of Bitcoin and isn't being manipulated by a few powerful players.
Right.
On top of that, there's also the matter of security. If a spot ETF holds a large amount of Bitcoin, it automatically becomes a huge target for cybercriminals.
That makes sense. It's like putting all your valuable treasures in one giant vault, and then someone tries to break in and steal everything.
That's a great analogy, a successful cyber heist. Or even worse, the creation of fake Bitcoins could really damage investor confidence, especially those who are already on the fence about cryptocurrency.
Wow. So it's like a high-stakes game of chess between those who want to see Bitcoin ETFs become a reality and the SEC, who is trying to protect investors from potential risks. It's fascinating to see how this is all playing out. This whole spot ETF situation sounds pretty intense. Are there any specific examples of this back and forth between the SEC and the companies trying to launch these ETFs? I'd love to hear about a real-world example.
There's one case in particular that's been making headlines. Remember Grayscale Investments, one of the companies hoping for a spot ETF approval.
Yeah.
Well, back in 2022, the SEC turned down their application. And Grayscale didn't just accept it quietly.
Oh, this sounds juicy.
Well, they decided to take the SEC to court.
Wow.
They argued that their rejection was unfair, especially considering that the SEC had already approved those futures ETFs. It was almost as if they were saying, hey, if you're comfortable with futures ETFs, which are also types of derivatives, then spot ETFs shouldn't be a problem either.
So they were pointing out what seemed like a bit of a double standard on the SEC's part.
Exactly. And here's the interesting part. The court actually sided with Grayscale,
Oh, wow.
and that led the SEC to agree to take another look at their application. That's why everyone's so focused on that January 10th deadline.
January 10th.
Yes.
Got it. That's when the SEC has to make a decision on Grayscale's spot ETF. This could be a huge turning point, right?
It really could. If the SEC decides to approve it, it could be like opening a floodgate for other spot ETFs. That could change the entire landscape of the cryptocurrency world. Imagine if investing in Bitcoin became as simple as buying a stock.
Yeah, that would be a game changer, wouldn't it? Suddenly, Bitcoin wouldn't seem so intimidating to everyday investors.
Right.
It would be like bringing Bitcoin into the mainstream.
Precisely. But there's also the flip side to consider. If the SEC decides to stick to their guns and reject Grayscale's application, it could send a pretty strong signal to the market. It would reinforce those concerns they have about market manipulation and security risks, which could dampen investor enthusiasm and maybe even put the brakes on that recent Bitcoin price rally.
So it's almost like the SEC is holding the key to the future of Bitcoin, and everyone is waiting with bated breath to see which way they'll turn.
I like that analogy.
Yeah.
But
Yeah.
let's not forget about the potential benefits and risks of a spot ETF approval. This is where it gets really interesting.
Okay, I'm ready.
Well, one of the biggest potential benefits of spot ETF approval is increased liquidity in the Bitcoin market. Right now, buying and selling Bitcoin can be a bit cumbersome, especially for larger institutional investors.
I see.
But with the spot ETF, they could easily buy and sell shares of the ETF, which would track the price of Bitcoin, making it much easier for them to get in and out of the market.
So it's like greasing the wheels of the Bitcoin market, making it run more smoothly and efficiently.
Exactly. This increased liquidity could attract even more investors, potentially pushing Bitcoin's price up even further. Plus, a spot ETF would provide a more regulated and transparent way to invest in Bitcoin. This is something that institutional investors, who are often bound by stricter regulations, have been waiting for.
This all sounds pretty positive. Are there any potential downsides to a spot ETF approval that we should be aware of?
Well, there are always two sides to every coin. One potential risk is that a spot ETF, particularly if it becomes extremely popular, could actually exacerbate Bitcoin's volatility. Think about it. If a large number of investors decide to sell their ETF shares all at once, it could trigger a sharp drop in Bitcoin's price, kind of like a domino effect.
So in trying to make Bitcoin more accessible and stable, a spot ETF could unintentionally amplify the very thing it's trying to mitigate.
That's a possibility. Then there's the regulatory hurdle. Even if the SEC approves Grayscale's spot ETFs, it doesn't mean they'll approve every application that comes their way.
Right.
They'll still need to be convinced that each ETF provider has adequate measures in place to prevent market manipulation and ensure the safety of investors' funds.
This makes me think about something you mentioned earlier, The SEC's primary concern seems to be protecting investors from the wild west of unregulated crypto trading.
You're absolutely right. They're treading very carefully. They want to ensure that a spot ETF isn't simply a gateway for fraudsters to manipulate the market and take advantage of unsuspecting investors. It's a delicate balancing act.
It sounds like it. On one hand, they want to foster innovation and provide investors with access to this exciting new asset class. On the other hand, they have a duty to safeguard the integrity of the financial system and prevent any potential harm to investors.
Exactly. And let's not forget, the world of cryptocurrency is still relatively young and evolving rapidly.
True.
It's a challenge for regulators to keep up with the pace of innovation and develop appropriate frameworks for oversight.
This makes me wonder about the long-term implications of all of this. If spot ETFs do become commonplace, how will that affect the relationship between traditional finance and the world of cryptocurrency?
That's a great question, and it leads us to a crucial turning point in this whole narrative.
Wait a minute, you're not going to leave me hanging again, are you? What's this crucial turning point?
Well, to understand that, we need to shift our focus to a broader perspective.
All right, lead the way. I'm ready to dive deeper. Okay, you mentioned a crucial turning point. What is it? I'm ready to hear more about this broader perspective.
Well, think about it this way. This whole debate surrounding Bitcoin ETFs isn't just about a single investment product. It's a reflection of a much larger shift happening in finance. We're seeing the lines between traditional finance and the world of cryptocurrency blurring.
So it's not just about whether or not people can easily invest in Bitcoin. It's about how this new technology is challenging the very foundations of our financial system.
Exactly. And the outcome of the SEC's decision on Grayscale's spot ETF could be a major signal to the rest of the world about how open the U.S. is to embracing this new era of finance if they approve it. It could encourage more institutional investors to dip their toes into the crypto pool,
Right.
leading to more innovation and potentially even more crypto-related financial products in the future.
That makes me think about something we talked about earlier, how the SEC is walking this tightrope between fostering innovation and protecting investors. It seems like they're under a lot of pressure to get this right.
Absolutely. And their decision will likely have ripple effects across the globe. Other countries are watching closely to see how the U.S. handles this situation. It could set a precedent for how cryptocurrency is regulated around the world.
Wow, it's amazing to think that the fate of Bitcoin ETFs could have such far-reaching consequences. But let's bring it back to the individual investor for a moment. What does all of this mean for someone who's maybe hearing about Bitcoin ETFs for the first time?
I think the most important takeaway is that regardless of the SEC's decision, the increasing interest in Bitcoin ETFs shows that cryptocurrency is gaining traction. Even among those who might have been hesitant before, it's becoming more mainstream and accessible.
So even if the SEC slams the door on Grayscale's application this time, it doesn't mean the story is over for Bitcoin ETFs.
Not at all. The demand for regulated and easy-to-understand ways to invest in Bitcoin is only going to grow. The SEC's concerns about market manipulation and investor protection are valid, but the crypto industry is constantly innovating. I think we'll see more creative solutions emerge that address those concerns in the future. This is a long game, and it's just getting started.
Well, this deep dive has been a real eye-opener. We went from feeling a bit intimidated by the world of Bitcoin ETFs to understanding the nuances of this complex landscape. We explored the potential benefits and risks, the regulatory challenges, and the broader implications for the future of finance.
Absolutely.
It's definitely been fascinating to explore all the different angles of this story. We learned about spot and futures ETFs, the SEC's role, the potential impact on the future of finance, and so much more.
It's been a pleasure exploring this with you.
And to our listeners, we hope this deep dive has provided you with valuable insights and sparked your curiosity to learn even more. The world of cryptocurrency is constantly evolving, and it's an exciting time to be a part of it. Until next time, keep exploring, keep learning, and as always, happy investing and each